get some insight into what the so-called retail, the at-home trader is buying. Your next guest says that most investors are still bullish and they continue to pile money into some what might consider risky assets. Here now on set to name some names is Gunjan Banerji, lead writer for Markets Live at the Wall Street Journal, also a CNBC contributor. Gunjan, good to have you on set.
Good to be here. Thanks, Brian.
We led the show. I don't know if you saw the top of the show with Chris Grisanti about how you can hate this market. You could say it's overvalued. You could say it's a bubble, but people are still buying. And that includes the retail investor.
They are still buying. They are still bullish. And, I think people think of 2021 as the peak of the speculative mania in markets. And they think things have calmed down since then. I think things are more speculative than they were even back then. And I think people are embracing more risk than they were even during the 2021 mania.
Okay, hold on now. That's a big statement because 2021, literally books are written about it. The Wall Street Bets crowd, Reddit investors, we did whole segments on it. You think right now might be more speculative than then?
All you have to do is look at the amount of leverage out there, right? I'm sure you saw FINRA margin debt balances at all-time
Yeah, I look
highs.
at it all the time.
Well, and also individual investors, they tend to favor leveraged ETPs, assets under management for leveraged exchange-traded funds tied to equities. So these are bullish on equities. Those have topped around $119 billion. That's the highest level ever, going back to Morningstar direct records, going back to 1990.
Are these some of those products? And we're not picking on one product in particular, folks. But are you talking about the ones that are like 2X and 3X
Exactly.
bullish products? Like you buy something.
Tech,
yeah, but if they
equities.
go down, you're down 2 times your money.
Sure. And take a look at what's happening in options, right? Individual investors loom larger in options than they did in 2021. Zero DTEs, prediction markets. You can now bet on where cryptocurrency prices will be within the next hour. So the market has become more gamified since 2021, and people have also embraced risk more than they have back then.
That what you said is so important because you can not only, and my producer and friend Max Meyer said this years ago on Last Call. It was good. I don't know if you saw that program.
I loved it.
Yeah, but it was the gamification of the stock market because the idea is it's not that you just even own a stock anymore. To your point, you can bet on where things are going without actually owning that thing.
Exactly. It's like instead of betting on the outcome of a sports game, you're betting on how many points LeBron James is going to make in the fourth quarter or something like that. So the time frame over which you can make bets on stocks and ETFs has gotten compressed, and people want to play the game.
Is there? I'm not picking on any company, but there's definitely a big game going on. I'm using my words carefully in crypto right now.
Yes.
Today we have Bullish. That's the name of a company. It's an IPO, started about 5 years ago. It's out of the Cayman Islands. That stock's soaring, right? We could probably show that. You've got Bitmine Immersion Technologies. Tom Lee's executive chairman. That stock, all it does is go up.
And
what do we make of all the stuff going on around crypto?
It's really interesting. To me, it feels like the new flavor of the SPAC, right? The SPAC was the hot thing a few years ago. Right now, it's these companies that are just buying loads of cryptocurrencies because people want to make these leveraged bets on crypto. I think a lot of the speculation is happening in Bitcoin, Ethereum, companies tied to that. It's happening in tech. When you look at some of the top names traded on Interactive Brokers, Fidelity, right? Those are the tech names. It's the NVIDIAs, AMD, Tesla. You're seeing animal spirits around stocks like Figma emerge as well.
Yeah, I wonder, in those, by the way, Interactive Brokers, those names, they're down. One day doth not a trend make. They are down today. Some of the Mag 7 are actually down. I mean, it's actually...
Can you believe it?
It's allowed. Apparently, it's legal. But I do wonder if some of that money is going to shift from the Apples or NVIDIAs, whatever, of the world to the bullishes of the world.
Yeah, you mean go into...
Like say, you know what, I'm done with the AI trade. Let's go into Bitcoin. Let's go into crypto. I don't know. It feels that when you look at a Circle, when you look at a Bullish, when you look at a Bitmine Immersion Technologies, it seems kind of that way.
I think you are seeing a lot of people go into those crypto trades, but it does not seem like people are tired of the AI trade just yet. Not when you look at the top names traded on these brokerages, not when you look at the price action this year in some of these trades.
You probably get much nicer comments than I do. You must hear from readers and viewers. What are they saying? Because half of my feed is like, we're doomed. But they've been wrong. You can make a good case of why stocks should go down 20%, but they don't.
So I recently wrote about Generation Buy the Dip. You know, this cohort of individual investors, a lot of them are younger, a lot of them haven't experienced 2008, the dot-com boom, when it took a lot longer for stocks to recover and reclaim new highs. The bounce backs the past few years have been a lot quicker.